Ladies and gentlemen, please join crypto enthusiasts and skeptics for a heated debate. To crypto or not to crypto? Will crypto fizzle out or here to stay? Give a warm welcome to the moderator, Hormoz Faryar, Head of Institutional Sales at ADSS.
Hi everyone, thank you for joining this panel about cryptos. We have an excellent lineup today in the crypto space, and we have a few people who are a little bit against, a bit for cryptocurrencies. We're not really going to talk about the blockchain technology, more about the cryptocurrencies themselves and the industry. And at ADSS in UAE, where I work, we don't do much crypto at all. We stayed out of it. So I'm a little bit, you could say I'm a little bit against it. As a moderator, I need to be a bit neutral, but let's say I'm not. So I very briefly wanted to introduce everybody. So I'm going to let each one of you introduce your companies, 30 seconds each, what you do, the main thing. We start here with you, Dan.
Cool. Thank you very much, Hormoz. My name's Dan Moczulski. I'm the UK MD for ETORO. ETORO are a social investing network, almost uniquely, I'm going to say, in this space, but feel free for anyone to correct me. We offer CFDs, we offer FX in margin trading, which I imagine is the majority of people's background here. But I also offer real crypto and real stock as well. That's our proposition.
I'm Adam Button, Chief Currency Analyst at ForexLive, founder of ForexLive. We do currency analysis mostly, but global macro for a retail audience, and sort of steering people in or out of this space is one of our responsibilities. So that's where I'll leave it.
Hi, I'm Jonathan Wykes. I am the Managing Director for the UK and Europe for CX.io. We're a crypto ecosystem. We've been around since 2013, and we offer crypto to basically retail and institutional investors.
Hi, I'm Ben Robson. I'm from CGS CIMB. I run institutional FX and bullion in the London office. Our company offers CFDs, FX bullion, equities, futures, and many products from our head office in Singapore.
Awesome. I'm Diego. I'm part of Binance.com. I'm part of the institutional team at Binance, offering connection to our exchange, which is currently the largest by volume in the world. Yeah, we offer spot markets and perpetuals for our institutional clients and retail clients as well.
Great. So I've prepared a few questions, and one of the first questions that I prepared, I wrote a few weeks ago, and it's almost aged already, but I'll go with it anyway. The question I had was, are we in a deep kind of crypto winter? Are we in a the deepest maybe of all time depressions in the crypto space? I kind of feel like maybe yes, but I'll start with you, Adam, and then with Diego at Binance, and see your view on the winter that maybe you guys even caused a little bit of.
I mean, price action has held up maybe a little bit better than you would have thought, given some of the, all the events that have come to pass over the last month. So, I mean, there's some resilience there that is promising. At the same time, we're back to asking the fundamental questions about crypto, and it's really, can you have trustless finance? And, without trust, is there any way to do this? And so far, the answer has just been to break trust over and over again. You have good actors in the space, obviously, but the bad actors get all the headlines and hurt people over and over again, and leave this industry, nascent industry, back at the starting point once again of us asking, what's the value proposition here? And we're all waiting for a use for crypto. Am I going to use this every day in some way or another? And the answers so far are maybe, but at this point, 10 years into it, we'd hope to be farther along.
Yeah.
Yeah.
Diego.
So the question was if we're deep into crypto winter, right?
Yeah.
I think so, yes. So if you think about it from a price perspective, on the last peak of the price, which is 69,000, We're about 80% down from that. So we're definitely seeing a bottom on the pricing for Bitcoin. In terms of how do we come out of this, or what's next for us, I think it's not the first time this happens for the market. So it's a cyclical market. We've seen that happen 4 or 5 times on the Bitcoin price. And if you look at it from a different perspective, from a wider perspective or long-term perspective, I think we're in a good spot. So if you've been in the space from 2013, like Jonathan, I think we will see that the price of Bitcoin is still very, very good compared to.
But, 69,000, 80% down, right? I know. My uncle bought at 68,000, I think, and he's down 80%.
It's still holding on.
I don't know. He's depressed in LA. Jonathan, what's your thoughts on this?
I mean, I'd probably argue that we're at the start of a crypto winter. So if you think about cycles, I think if you look at crypto since 2000, going back to 2009, you've had 4 different cycles, and I think we need to kind of avoid the term crypto winter. We're just in a bear run, right? And these cycles last about 4 years from peak to trough, and this started in sort of June of last year, and you've obviously seen the fallout. There's normally major catastrophic events that cause these bear runs, and we did a bull run obviously to take us out of that, but I don't think that's going to come anytime soon.
Ben, 80% is a lot, huh? You wrote the book on Currency Kings. Do currencies ever drop 80%? I mean,
well, the Swiss franc strengthened 80%.
No, was it 80%?
I remember that day.
80%.
120 to 0.65, I think it went to in about 3 minutes.
Yeah,
the official print was 0.95.
Yeah. So, what's your thoughts on the?
Well, my general thoughts are that we're in a bear market in general, so that's not just crypto. So you have interest rates that are going up, you have inflation, you have stock markets that are collapsing. The issue, I think, is that we've had too much credit or free money in the system. That's led to bull markets across many markets. So I tend to be crypto agnostic. I think there is a role for crypto, but I don't think there's a massive upside at the moment, because I think we still have some more room for the downside.
Dan, did you want to add anything before I go to the next question on that one?
Well, I've learned not to go last in these panels, because essentially I echo all the comments that we've had there. I think, we refer to the term crypto winter, and in this particular crypto winter, we use it in reference to the price. We're not using it in reference to adoption. We're not using it in people that are involved in blockchain technologies. That does seem to be progressing. What I would also say from an eTORO perspective, this is not like it's not like some other asset classes where there's a deflation in the asset class and people just get out of the market. People are still enthused by crypto. We're not finding people who are selling their crypto positions. They're holding them. Now, that's obviously easy when the market drops by such a huge margin. But we are seeing that interest is still there. And that floor price that we have at the moment for, say, BTC, we've never been there before in the previous highs. So I think we have to accept it's a crypto winter. We have to also identify, as we talked about before, there's not many asset classes that we can't say are in some kind of winter. And the question really is, how long is it going to last?
Just to add to that, I mean, one of the challenges, of course, is that it's a relatively new market. So unlike equities or FX, where you've got trends that go back years and you can analyze that, you can't do that in crypto. You can only go back, just over a decade. And like I said, you look at the cycles. Can you predict, if you were to look at the previous cycles, you'd predict that we wouldn't be out of this crypto winter until 2026, which clearly is not going to happen. Hopefully something innovative will come about that will cause investor interest again. So, but also volatility still causes people to have opportunities. So you will still see people investing in the crypto space.
What do you mean by investing? Do you not mean speculating?
Well, unfortunately, yes. And I think actually to get the market back to where it needs to be, we need to move from speculation to more actually investing in actual true fundamental value. And that's not there in the crypto space at the moment.
Yeah. Now, and I'll add to that. So when you know when prices are going down, people are exiting positions, but the people that are building stuff in the ecosystem, they stay there. So we've seen this before in the ICO boom. All these ICO they just went down. A lot of them were scams, but the ones that stay there and start building stuff, they are now the ones that are succeeding at building the ecosystem in the crypto space. So I think for what we'll see now, there's going to be less distractions around price and more focusing on building in the ecosystem. So we've seen that at Binance, and we're focusing on building our products and building our ecosystem around it as well.
So I'll tell my uncle to buy a little bit more, average out the price, buy a little bit when
Let's
it's
see.
lower.
Dollar
and avoid
cost
the,
average.
Yeah, and avoid the bad players if you can. Okay, let's move on to the other thing that I'm really interested. I know some of you are not so interested in it. It's but central bank digital currencies, and I find that they're really pushing it, and there are different views on whether that's good or bad. Central bank digital currencies are where the central banks essentially program the money, and they have control over it, and they can program how it behaves in your pocket, essentially, right? Where they can put expiry date on it. They can say, here's $10,000 or in your wallet, but it's expired in 30 days. You better use it quickly. So they can create quite cool ideas, right? With that, with inflation targeting, and maybe, lowering consumptions in certain fields. Maybe they don't want people to eat as many burgers. They can restrict that on the money side, right? So there's quite a lot of things they can do with that programmable money, central banks. The question is, how will it impact the industry short-term, medium-term, long-term? Dan, you can go first. I know you don't want to go last. So how will it impact the long term for you guys, the central banks coming in, kind of saying, maybe we are the ones who can do this only?
Well, look, I'm actually going to take it on the short to medium term. And we've almost half had this conversation before. And what I see in the UK, the Europe, and actually kind of globally, and it remains understandable, especially in the current crypto winter, a skepticism that attaches itself to digital currencies. Now, there's a number of reasons why that skepticism is there, whether it's a value of cash, what's its use case. But what I do think with central bank digital currencies, it is establishing the concept that digital assets are a thing, and they're believed on by central banks, by governments, by regulators. So my own personal view is that the regulation is the biggest hurdle the crypto industry has to kind of move past. And any kind of adoption by any kind of central authority in this case, no matter what aspects of crypto that it takes on, I actually see as being a good thing. Because it's saying that this concept exists, central banks will use it because it's cheap to move around, it's efficient. So I can see any adoption by any country to onboard these digital assets as being a good thing generally for the industry.
I mean, I think you need such a strong framework, right? There's this dystopian future around the idea of a central bank digital currency, but I deal in a lot of economic data. The use case for it would be almost real-time economic data. We're managing an inflation crisis right now, so companies are deciding what to spend, so not so much the government telling you what you can or can't buy, but knowing right now what the prices are. I mean, we're looking out to next year thinking about, okay, is inflation going to be a problem or is it not? And the data that we get is so dated by the time it comes out, the businesses aren't making good decisions. So you may have a case for a lot of upside with a digital currency, and maybe they could do your taxes for you. I pay my taxes. If you don't want to pay your taxes, that's not a great thing. But, you might end up in a surveillance state, but we might end up there anyway. So it's hard to think that 1,000 years from now, it won't be a digital currency in some way or another. So we have to get talking about a framework for how it will work, how it will protect privacy, and how it will function and be useful or not. In terms of the rest of the crypto space, I don't know if it validates it. It would compete with it, and I just think it would lose if that's the government's intention. I mean, they're all powerful. So, I'm open to the idea that they could coexist, but, there has to be a use case there. And we'll see. Somebody's going to adopt this probably in the next 10 years. probably sooner. And hopefully it goes well, because that first case is going to be so important.
I think you have to look at it quite differently and treat it very differently. So your central bank digital currency shares the same architecture, the same smart contracts, the same blockchains, same secure ID, but that's about as far as it goes. After that, it's kind of, an authority, a government centralizing their money and giving a guarantee on that, which is obviously adds some economic value. When you think about cryptocurrency, it doesn't have that, right? It's decentralized in its absolute nature. So they have to be treated very differently. You could say that one of them, if it's successful, might sort of, see the demise of the other. But I don't think so, because they're very different and they have very different values. And one of the things that you correctly said was that you move away from speculation to real value. And that's when you see that, perhaps one thing we see is very much an increase in the adoption of stable coins, not algo-backed stable coins, one-to-one stable coins, right? And that's because people want to store their returns in some kind of coin that has a one-to-one value. And it may be that that CBDC can take that place, but I think we're yet to see. I think we're a long way off really the true value of CBDC.
Ben, what's your thoughts on that?
Well, my initial thoughts are, how many ways do you wish to pay for a cup of coffee? There are many.
Apple Pay.
No, but you have Apple Pay, you can have Revolut, you can pay for a coffee with your credit card or your debit card. So is there a real value to having a central bank digital currency? I tend to be a bit cynical about it.
No, central banks would remove the middleman and be directly...
Well, they are the middleman, yeah.
No, as in they would remove the banks as middlemen and those names you mentioned, and they would just go directly from me to the central bank, and I would deal with them. There is no need for middlemen, kind of.
Well, the central bank.
Kind of. There will always have to be some sort of wallet or custodian in the middle way, which is kind of where we kind of.
That's where you want to be, the middleman.
Well, not
so I know you're
really.
doing it for governments, right? So you guys want to be building central bank.
We do support a lot of on the education and the ecosystem. So we're supporting governments at the moment in terms of consulting them, and how do we support your building of your central bank digital currency. To make it seem not so restricted, as you said, like they're not allowing you to buy things, but also to be part of the decentralized process and the globalization of the digital bank central currency. So I think that's the main part, and I think we all that are on the ecosystem, we need to be supported, and building together is the way to go for those type of products as well.
I think really echoing about the infrastructure as well, though. We talk about the term central bank digital currency, potentially controlling whether you buy burgers or not. But, I've only ever considered it for the wholesale markets. I've only ever considered it for a central bank monitoring other banks. So it's how far this would go down. So I think I'd agree with you in terms of is it there to compete with what we might view as more conventional cryptos for the retail market, and it's all about how it gets delivered.
Yes, and just to piggyback on that, so we had a couple of not very successful examples on digital bank central currencies. So you had Venezuelan government, which are where I'm from. They build their own kind of digital currency, all centralized, very, very controlled, and it wasn't very successful. It's just for them to be able to give out money and print out money in a different way. Same with digital yuan. They tried to do something around it, and it wasn't very successful. So I think there has to be some workaround with the ecosystem to build the trust from the people that are already building stuff around.
Yeah, but let's face it, in 5-10 years, the central bank digital currencies will be good, and they will be used, and they will maybe be kind of forced on the ecosystem. And the central powers don't like decentralized stuff. They don't like that I'm in Dubai, I send Ben something without them approving it. And decentralized crypto is something, in my opinion, they could maybe ban. Could they ban it?
Can they ban the internet?
Well, I mean, I think one of the reasons
They could.
one of the reasons why cryptocurrency is still very popular is because in many countries they don't trust the banking system, and so we have lots of users in Ukraine, for example. They're not going to start having a central bank digital currency in Ukraine. They don't trust the banking system. They don't want their money in what might be a traditional banking system, and so they want to be paid in crypto. They want to invest in crypto, and that seems to be, I think you will tend to find that across sub-Saharan Africa as well. So it's going to be very hard for a central bank digital currency to come out in those kind of markets because people simply won't trust it.
I think, Jonathan, it's a really good point in that we all look at crypto from a UK, most people here from a UK or European perspective will sit there, potentially the skeptics, and say, well, we've got the pound, we've got the euro, I'm perfectly happy with all my money being held in the domestic currency that we have. It's interesting that the onboarding of cryptocurrencies is happening in countries that don't have that stable currency that's there. And I think, the currency being banned or a crypto being banned perhaps adds weight to the idea that you might want something that's decentralized.
Just to come back on that, you talk about centralized and decentralized currencies, and I appreciate that there's a big take-up in sort of less developed countries per se. But the issue is that there is huge volatility in crypto currently. So you can't really pin. Well, you have a value at the moment where Bitcoin is trading, but there's a vast majority of Bitcoin are held by the Bitcoin whales, and it's the poor little retail investors that jump on the bandwagon and pay 68,000, and then they cry for the regulators when it's going the wrong way. Now, in equity markets, the value of a stock can deteriorate by 30% on earnings, or you've seen that with Meta or Netflix or companies like that, and equally cryptos can drop very significantly as well. So I don't think there is a sort of massive safety in a crypto per se.
And that, I totally agree with that. And one of the strengths that eToro has, and one of the messages that I always talk about when we are presenting at events like this, is this concept of diversification. This concept of, it's nobody would ever be suggesting put all your money into one particular asset class. And I think that is, the point in these kinds of things. So would I like to put all my money in Turkish lira? No. Do I recognize it's there as a currency? Yes. So I agree with everything that you're saying, that I'd never suggest to anybody this is your answer at the moment, no matter where they are in the world.
The problem is that so many people do. So many people put all of their money into, if they're investing, put all their money into crypto. They don't hedge, and you only have to look at what's happening now to see hedge funds 100% exposed to companies that have gone bankrupt. And you think it's a hedge fund, why aren't they hedging their exposure in traditional markets or using other assets? And they just don't. And you see that a lot in the crypto sphere. We see our users just, even if they want to hedge in something, they'd rather hedge in a tokenized version of a traditional asset rather than go to the traditional asset. So it's education, I think.
It has to be fixed.
Really help. It has to be fixed.
Yeah, and touching on the hedge fund area as well. So I think going back a little bit about why they would have 100% exposure to crypto, I think that's also part of the regulation aspect around the world. If we had clear regulations in the industry where we could, have a hedge fund with 100% exposure, if they wanted to, in the UK, they could do it, but it's not that way. So they try to find ways to go outside of their regulation to be able to expose themselves that way. But I guess if we had a clear perspective on how things could be done, we wouldn't have those types of structures around in offshore entities and what's
I think I'll get the final say on this one. I think central powers, when their central bank digital currencies are ready, 10 years, 20 years from now, they could easily ban and enforce a ban on decentralized cryptocurrencies in the West. I think they could do that, and they can get away with it.
Well,
recent events certainly make it a lot more compelling. The regulation is coming. Right?
Yeah, crypto exchanges are banned in China. Like Binance is banned in China, but people still find the way to get to cryptocurrencies. So
there's a difference between trying to do it illegally and a lot of things are banned in the world. Yeah. But I'm saying,
that happens in other markets. It's called regulatory arbitrage. So you can have 400 to 1 leverage if you have an account in the Seychelles, for example.
And I think it's worth remembering, one of the stimulants to the crypto market was the events in Cyprus. What are we talking about now? 10, 15 years ago, when anybody who had more than 100,000 euros in the account, They took it. So, I don't think necessarily it doesn't happen with conventional currency, with fiat. It's just, as you say, hopefully it doesn't happen again.
Yep. So Dan, we're gonna leave the central bank digital currency and move on to something brokers talk about. By the way, I'm gonna ask later on for audience to give questions. So any FTX questions? You're ready, right? You got the corporate answers written down, I'm sure. So I'm gonna go to Dan for the brokerage world. CFDs versus spot. Can you clarify what's the benefit? What should brokers do in that space, in your opinion?
So I've operated in the brokerage space now for over 23 years, and conventionally, that's always been in the derivative space, so CFDs, FX, and spread betting. And one of the reasons that I joined eToro a couple of years ago was to get exposure to crypto, but also to zero commission stock. And I'm guessing here the audience is predominantly FX and CFD brokerages rather than crypto. So if I could just have, is the people's background FX and crypto and CFD rather than crypto?
So who's crypto in here? Crypto only? Rami, what?
And then everybody else is more involved in FX and CFDs?
Yeah, everyone
predominantly nods there. So what I think is worth recognizing from a brokerage perspective in this space is the difference in the audience. Predominantly people trading FX and CFDs are, by nature of the product, trading price differences. The motivation is the price difference. What's happening with crypto is you are getting a lot of people that are buying into the underlying principle of the coins, and that's driving people in. Firm believers in where it's going, and this is why I feel, say, this crypto winter is interesting. Where I've dealt with derivatives in the past, where markets have gone down, people get out of the market and leave it. That's not happening with crypto. People are sometimes buying more, but they're certainly not selling their positions. So from a brokerage perspective, it's valuable in that respect. Other aspects that it's valuable is, we all know with CFDs and FX, you have to fund the client's position with your own capital. That's not the case with real positions. So there's real benefits to brokerages offering this variety of assets for their client base.
I mean, if I'm looking at it from a retail perspective, I mean, the people here are wanting to, should I invest in crypto, or if I'm a broker, should I invest in crypto and brand myself with that? I think you're asking for regulatory problems right now by putting that front and center. Obviously, everyone wants to offer everything. And then if I'm a retail investor, why now? Why? That's the question I have to ask myself, is why now? I mean, am I using this a lot? Am I seeing a use case for it? Do I trust anybody on the other side of this? Is there anybody that can be trusted in this space? And is there an underlying value? I can value Netflix on earnings in some way, or oil in whether I'm using it. So, there's just too many questions right now wanting to say, do I really want to be in this space right now? And everything else has gotten cheaper at the same time. So there's a lot of value out there, and I just don't think that is where, was where the game is going, or where the puck is going, to use the Wayne Gretzky analogy. So, I just can't see it right now.
Diego, do you guys do the CFD?
So we offer perpetuals, which is futures contract. So it's similar to a CFD in a sense. The only difference is that it's settled on stable coins rather than on cash. But again, I think going by what Dan said, I think we need to think about the underlying technology, right? So if people that are you see this nowadays, like trust has been broken with recent events. People are sending their coins and their crypto to the non-custodial wallets, to their own private keys, and that is something that's really interesting, because that gives the power of ownership of their own money. They hold their own private keys, they all hold their own money, and they don't depend on any third parties for the ownership and the safety of the funds. And that brings privacy, that's being ownership, that's being trust, and so it's a trustless system in a sense as well.
Well, I mean, one of the challenges with that is that, and we do the same. We allow people to have a private ownership, and we don't do custodial services in the traditional sense of the word custodial. but it's a lack of understanding. And that's where you really the market needs to move, and you will find that for this market to be more widely accepted, it needs better governance, it needs better regulation, and more importantly, it needs better risk management. And so as that happens, you'll see crypto winters become less and less. They won't bite so hard, and it'll become more, and there'll be less volatility because it'll become more like a proper regulated, standardized market that that equities, FX, and fixed income and other markets are.
I feel like regulating cryptos is a bit like you said, regulating internet. It's tricky, it's difficult. Globally regulating cryptos, let's see how it goes. But
I had a point.
Yeah.
From the brokerage perspective, you have leverage, you have transaction costs, and you have funding charges. And these are big money makers on crypto because the crypto market, the spreads are obviously wider than in the FX market. They're negligible, as you know. Right, so there's a big appeal for brokers to offer the crypto product because it makes some money. And then the second point is that the market demographic, the target market, I think is the Generation Z target. So I have 2 daughters in that category, and we've had a bunch of interns that have been in that category that have come to our office. And it's a wholly unique way of investing that these people have. And that is driven a lot by social media. And that is really where I think the bulk of the adopters of crypto come from. I recently ran a class. I run a class in hedging and risk management at the International University of Monaco. And I spoke to my MSc students about what they're investing in or trading in. And there weren't so many of them, but the only ones that were speculating in crypto, and they'd all lost, by the way. And I asked them why they had invested or speculated, and the answer was that these acronyms that you hear, fear of missing out, you only live once, it's going up, it's crypto, it's a new way forward. Right, but I remember when I did my MBA 20 years ago, we had the NASDAQ boom and bust, and that dropped 80% in about a year and a half. So
are stocks losing out then on this new stock trading versus crypto? It's crypto.
The point is, from a brokerage perspective, the point is very relevant. That audience for trading crypto, and I'm surprised by it myself over the last, say, 4 or 5 years. If we look at, say, the number of retail derivative traders in the UK, I think it's considered, let's say the conservative estimate's about 220,000. Maybe, as I say, it could be 350,000 of retail derivative traders. The FCA announced that they believe that 2.7 million people in the UK actually hold crypto. So it's a completely different audience. What I would say, and I'm not trying to in fact, I am agreeing with your point, but I saw exactly the same price movements with AMC and GameStop in January last year. That exactly same motivation in order to kind of fear of missing out.
And are people going back into these stocks?
There are within crypto. In fact, I do believe, and this is part of a more boring and wider position that I hold, that people are not just going into positions now because of price movement. They are deriving some utility from their investments. So the person that invests in Tesla is investing in Tesla not just because they think it might make them money, but because they want to be a part of the ESG components of where Tesla's going. They want to even a certain degree, if they can't get a Tesla car, they want Tesla stock. And that has changed over the last 5 years.
Can I come back quickly on that?
Mm-hmm.
I think there are better investments than Tesla. If you look at the commodity space as a whole, I mean, Tesla certainly had a competitive advantage at one point, and I've done a lot of work on competitive advantage. But right now, you can do a lot of work on competitive disadvantage, and there are better value prospects, in my opinion.
Completely, but did you see my point in that it's not unique to crypto? People are believing in the assets that they're purchasing at the moment and want to be associated with them.
Okay, so we know a lot of the positives about cryptos. People, transfer of funds are cheaper. You can get rich very quickly and all that stuff. But let's talk about some of the negative things of decentralized cryptocurrency. What's the can you guys mention some
the waste. The waste it's a tragedy. It's a human tragedy.
The waste of energy
that's going into it. I like to say that we spent the last 10 years mining Bitcoin when we should have been building mines. You know, if we're going to do the green transition, we're going to need as much copper as we've used in the last 5,000 years.
Well, we could
And
have
those
sent more ships to space.
Well, exactly. So, I mean, but everybody knows that. I'm not breaking any new ground here.
I mean, but that's one coin, right? So that's Bitcoin. We've seen transition to greener versions of crypto. For example, Ethereum moving from proof of work to proof of stake. We have Cardano, also a proof of stake, and many other currencies that are based on just the network and providing validators to the.
So waste of energy, one thing. What's the other stuff that's negative?
Scams, hacks, trust,
Transaction costs.
Transaction cost.
And the fact that and the naivety of the general investor client base.
I mean,
but
I would
that's
agree.
not
Lack
the
of
problem
understanding is a big problem.
That's not the problem of cryptocurrency.
It's a problem of the marketing behind crypto.
Yeah,
It can be seen as being overly complex, and it can be quite complex.
And I would go back a little bit into what you were saying before, the social investment aspect of crypto. I think that's also not great in many ways, because that opens the door to many scams, many possible just very badly made tokens that are just copy from other tokens. So yeah, I think that's not great for the industry. It creates a lot of noise, but I guess you got to see the positive aspect of those as well.
Yeah. So maybe also crime and that stuff is also a little bit of criminals can hide some stuff there as well with cryptos, right?
Laundering money through a public blockchain is not the best way to do it, because everything is very traceable.
What's the best way?
I couldn't tell you for sure, but definitely not crypto.
So Ben,
Yes.
here's a question for you.
Yes.
Would you rather invest in, let's say, Bitcoin or gold?
Okay, it's a fair question. I'm a current commodities bull, first of all. Right, so I think there are better investments than gold. I think people have tried to market certainly Bitcoin as a gold coin. It's mined, it's a store of value, a means to transfer money and hedge it against inflation. But neither gold nor Bitcoin actually really perform either of those or any of those functions really. Gold has a longer history than Bitcoin. I think if I could get 10 gold coins for one Bitcoin right now, I'd take the 10 gold coins.
You'd go, okay. What's been good with inflation? What's generally better than gold on inflation?
Lithium, cobalt, copper.
Other metals.
Well, copper actually is down, but it's these are commodities that will have a value in the EV space, in the battery space in the future. They're quite interesting. Lithium's up 1,000% over the last 2 years.
Jonathan, you're going to say properties or something?
No, actually, to be honest, I tend to agree. But what we tend to see in our market is tokenized versions of gold, silver, copper, etc. And we've seen people investing in those. They just do it through a cryptocurrency wrapper on the actual STO. So.
I was going to say on the tokenized part, we've seen a lot of traditional banks and traditional asset managers that are starting to think about how they tokenize their own products and their own structured products into blockchains and into different networks. So that's my 2 cents on that.
Thank you. Before I move on to the next question, I wanted to ask if audience has a question, and then maybe if they don't, we'll move on to the next question. So can you guys, anyone who's got question for Diego at Binance, I'm just kidding, about the crypto space, just raise your hand and they'll bring a microphone to you. Any questions? It's so clear, right? Oh, there's one there.
There's one.
Get ready, Diego. FTX.
So good.
Hi, can you hear me? Yeah. What you guys are saying up there is really interesting, but is there not an argument for short-term investment and long-term investment? You're asking, do you want gold or do you want Bitcoin? Shouldn't the question, I'm buying Bitcoin for my children, for in 15 years' time. Surely that, so for Diego, who's Binance, I'm kind of your client because I'm dollar cost averaging with Bitcoin, etc. Currently, my portfolio is 0. I used to hold quite a large supply of Bitcoin, sold the locks. I used to be an old school FX trader. So I understand, can't get in at the bottom, sell at the top. It's not going to happen. But in all of your arguments, shouldn't it be long-term investors do X, short-term investors do. Why?
Well, yeah. I mean, I find long-term even more difficult with Bitcoin
absolutely.
than gold.
I think on a retail perspective, long-term investment is really there. And as I mentioned, privacy, holding your own keys, people are holding their coins, people are taking their money out of exchanges into their private wallets. So, but from an institutional perspective, which is the more high-frequency trading and liquidity providing, we see different strategies. So arbitrage was one of them up until a couple of weeks ago. But we're still seeing it happening. I guess obviously a lot of volume migrated to us for the last couple of weeks, but we'll see funds and hedge funds building their strategies again around different ecosystems for short-term investment.
I personally think it's a case of tulip bulb versus light bulb, right? You know, one is very speculative, the other one adds real value. Maybe something insightful might come. And if you're looking for a long-term investment, you really need to believe in the actual underlying fundamental value of what you're investing in.
You know, I'm repeating myself, but I'm such a believer in diversification. You know, and whether that is short-term, long-term, I really don't want people to approach any asset as a kind of binary solution. You know, even if I talk to an absolute crypto skeptic, you know, I know how many times I'm wrong on things. I just can't see why you wouldn't thought, right, I'll have a small proportion of my exposure even into something that I don't necessarily agree with, because there is a good percentage chance I'll be wrong. And that's my approach to this.
Great, we got another question here, actually.
Thanks, Hormoz. I know you mentioned at the start that blockchain and crypto, we don't want to mix with each other, but they are interlinked in my opinion. So we all know the benefits of blockchain as a technology. So let's not go into that. But does the panel actually genuinely think that even 5 years, 10 years, whatever the period is, will crypto ever get regulated across the globe?
I think
it has to.
Yeah,
I think it will.
So, yes, and now more than ever, I think we will see regulators with a lot of eyes on the industry right now, and I think it's needed more than ever. Obviously, as long as incentivizing innovation and it's not just banning everything, I think regulation is needed and is very well underway.
But can the regulators take ownership of something decentralized? It's you know what I mean? It's like, who's going to regulate? They can regulate in their own space, and
they can regulate us, the centralized exchanges and the centralized platforms, and that's fine. We're all about that, and we support that as long as it helps innovate and it helps the ecosystem. So yeah, they could regulate that, but if
can't regulate me just directly peer to peer.
No, they can't. They can't, because you are the holder of your own coins. So if you want to transact outside of centralized partner, that's the beauty of cryptocurrencies, right? That you don't need a middleman, you don't need a centralized exchange. Is a peer-to-peer network.
I know.
Yeah, I mean, listen, blockchain technology hasn't delivered that much lately. ASX, Australian Securities Exchange, invested $250 million in building a blockchain-based securities system, and they just gave up. They just threw in the towel 2 weeks ago. So, you know, I just am not seeing that the time to buy crypto is going to be when you use crypto. I mean, the .com bust, all these stocks were flat for 10 years until everybody got Amazon Prime, right? And that was the time to buy Amazon when they rolled that out, a thing that you were using all the time.
What's the cool use cases now for the latest?
Well, if you look at Amazon and Google, they're offering blockchain as a service now.
Yeah,
So, you know,
JP Morgan made the first transaction a couple of weeks ago on Polygon Network.
I thought Jamie Dimon wasn't negative on
But is that a crypto investment though, right? Like they're offering it costless, right? So that the value of that crypto is zero.
Yeah.
And that's the value in the blockchain, or the value in a lot of cryptos is not the price of crypto. And if I'm at this conference, I'm thinking as a broker, do I want to invest in this space? And I think, you know, the arc of retail trading, which we deal with a lot, is people make stupid investments and then they slowly, hopefully, start to make better investments. And if I'm a broker, I want to help people transition from just, if I'm Binance, I want to offer traditional investments at this point, because I think, you know, you offer someone a good service as a broker, and whether they lose their money or not, that's not your fault. You want to try to educate them, and you want to try to say, you know what, you can get 6% in a bond for your child for 15 years from now, right now. So maybe that's something you should be thinking about.
Are you going to come into our space, the traditional brokerage, our space, ADSS? Binance?
Yeah, why not?
You've seen a
What I
trend
do.
of crypto going to banking and banking going to crypto. and
People
that's
like
gonna
Yes.
you
continue.
going to, what, 25 years FX and then...
So I came from FX
mean-
background as well. Yeah.
To answer the question, though, I think it's inevitable in that, if we look at the crypto derivatives ban that the FCA rolled out several years ago, I think that was an effort to say we don't want anything to do with this. What's happening now is financial promotions are coming under regulatory frameworks. We've got the AML license that we've all got. Slowly but surely, it's chipping away at certain components of the product that we offer, and it's becoming regulated. So I think it's inevitable in some format.
Great. Thanks, everyone. We're out of time. So
Thank you.
Thank you.
Thank you, guys.